Hello and welcome to Property Hotline on India's first property channel, Magicbricks Now. I am Kavita Krishnan. Today we are answering all your tax questions related to property. So if you have any real estate questions, feel free to contact us. Contact details flashing on your screen. Our expert for the day is Pannkaj Ghadiali. Pannkaj is a managing partner at PC Ghadiali and Company LLP. He joins me in our Lower Parel studio. Pannkaj, welcome to the show.
Good evening, Kavita.
Good evening. Let's get started with the question that's come in on Facebook. So Kapil Jain says that he bought a resale property but did not deduct the 1% TDS. Now the IT department has sent him a reminder for it. However, his seller has already shown this amount in his income and has paid tax on it. What can Kapil do now? That's a very difficult problem over here, but this is something that a lot of people are facing nowadays.
Exactly, because I think it has not become as known as it should have been.
It's not percolated down that you have to pay
the law is there,
1% TDS.
and you are required to deduct 1% TDS from the consideration that you pay to the seller. So first of all, you don't pay it from your pocket. You are only deducting it from the consideration. Now, Kapil should have deducted 1% TDS and deposited that with the government. Now, his only default is that he has not deducted that. So obviously, he is going to get a query from the income tax department. Now, as per section 194(1)(a), he has to deduct this. But now that that has already gone, that period has gone and he can't do anything and he has paid the entire consideration, what he can now do to salvage the situation is, he can tell the seller that please give me the details of the tax paid by you. So he needs to get evidence for three things. One is that the seller has to have filed his return. He should have included the capital gains amount in the return, and he should have paid the taxes on that. So if the three things are complied with, then he will be able to, he can show that, and this he can show it by way of a certificate from his chartered accountant or some other tax professional.
Now, Pannkaj, what you're saying is probably possible in an ideal world.
Yeah.
Now, I don't know whether Kapil has bought property on resale over here or whether he's bought it directly from the developer. But what if the seller, whoever is the seller in this case, is not willing to give those tax documents that you're talking about to Kapil? Then what can he do?
Then unfortunately, you will have to pay 1% plus the interest from his pocket.
1% plus the interest. And I was just, in fact, coming to that. Now, I know that you need to pay this after April 2013, if I'm not mistaken.
That's right.
June 2013, I'm sorry.
Yeah.
On any transaction of immovable property after June 1, 2013, you need to pay 1% TDS.
That's right.
So if you've signed any agreement to buy or sell property, you will need to pay this 1% TDS. Now, tell me this. If you have not paid it, like you said, you will have to pay a penalty. How much is the penalty that is chargeable?
No, so penalty is you pay the amount of tax and you pay the interest.
What is this interest charged at?
It is charged at 15% for every month.
15% for every month.
So 15% per annum.
Okay. So, I repeat this in practically every show, I guess, but I can't help it. If you are buying property, and let's agree, most properties today, at least in the major city, in a city like Mumbai, is priced upwards of 1 crore, and you are paying 1% of that as TDS. You are better off paying off the TDS at the time of buying that property. If you delay, then you end up paying something like 15% interest per month, and that is a huge sum. Once it starts adding up, you'll probably end up paying half the price of your property as interest, right? Also, what is, very quickly, Pannkaj, what is the time period within which you need to pay this TDS?
Immediately, within the next month.
Within the next month. I believe it's within before the 7th of the month.
7th of the next month is the due date. So, therefore, the month in which you have deducted is the month you can get. The next month, immediately you have to pay it in the first 7 days.
So remember, if you're buying property, you need to pay 1% TDS on the cost of the property, and this money has to be paid within the 7th of the next month, which means you get a very little time to pay this. Ensure that you do it. It's an easy procedure. You can do it online. Ignore this at your peril. You'll end up paying something like 15% rate of interest for every month that you delay this payment. We have Anand Kasana now, who's dialed in from Jaipur. Anand, how can we help you?
Yes, very good evening to you.
Good evening. Tell us.
Good evening.
Yeah. Good evening, Mr. Pannkaj. I do have a question that I am an applicant of the loan
Okay.
and my wife is a co-applicant
Okay.
Okay.
and she is the owner.
She's the owner. Okay.
She is
You're not
the
listed
owner.
as an owner of the property.
Yeah, and I'm paying the EMIs of the loan from my account.
Okay.
Okay.
So can I avail the tax reduction rebate from my side?
He is the applicant, his wife is a co-applicant, and his wife is the owner.
So how are you becoming the applicant when you are not a co-owner? How are you becoming the applicant?
I'm not a co-owner of the property even.
Okay.
I'm just the applicant of the loan.
Okay. So your name has not been joined in the property at all.
No.
So what happens is that the amount of EMIs that you are paying on behalf of your wife virtually become a gift to your wife. Now, giving a gift to your wife is not prohibited, but any income arising therefrom is always clubbed in your hands. Now, whether the amount is income or loss, in both the cases it is clubbed in your hands under section 64 of the Income Tax Act. So therefore, when you are paying the EMIs, therefore you are obviously meeting the cost of interest also. So then that amount will be clubbed in your hands, and therefore you will be able to get the deduction for the interest.
So essentially what you're saying, Pannkaj, is that he can claim deduction over here.
He can claim deduction.
How does he show? Because like he said, the loan is in his name, the house is not in his name. So how does he really prove that he is paying the EMI for a home?
Since he is paying the EMIs on behalf of his wife, that is the amount of gift. And any amount that is gifted to your spouse, the income or loss arising therefrom is clubbed in your income.
Okay.
So if say 50 lakhs he had to gift her and she would have invested on a fixed deposit, that interest from fixed deposit would have been taxed in the hands of the husband.
So essentially, does he have to, does he have to prepare a gift deed or something which he has to show to the IT department? Not necessary.
Not necessary. He can simply take the interest and club it as, show it as his expenditure.
Okay, so you can in fact, though it's a very unique situation over there, Anand, but you can in fact claim deduction on the EMI that you're paying for the home loan in your wife's name.
But please remember one thing, that in future when you sell the property, the capital gains also will be taxed in your hands. So today you will feel happy about claiming the interest, but tomorrow you might have to pay the capital gains.
The government doesn't know how to take back what it gives you,
Yes.
right? So let's move on to an email query now. Rupashri Chaudhary is written in. She says that she and her husband have jointly purchased a home. Now they are joint owners. The interest amount of the home is 5 lakh rupees. It is Rupashri's first house and the second house for her husband. Now she wants to know how they should distribute ownership to save maximum tax. Does it really matter when they
this query is fairly complex and I might need a little more time to answer this. First of all, it is not clear whether who is the whether this is a joint property, both have contributed or only one has contributed, whether the property has been given on rent or otherwise. However, let me take a simple example. I'm assuming that both of them are 50% co-owners.
They're saying joint owners, so I'm guessing that's what they mean by that.
No, but joint ownership does not mean co-ownership. You may just add in the name of a person and the person can become a joint owner. Whereas when you say that you are a co-owner, that means you are actually contributing the amount towards the cost of the asset.
Okay.
Okay, so I'm assuming that both of them have contributed equally. Now, taking that presumption and taking that, okay, this house is rented out, because we don't know whether the house is even being rented out or is being self-occupied. So first, there will be three situations. So let me give you the first situation where we feel that the house is rented out. Now, where there is a joint property and the house is rented out, you have to compute the income from house property as a one single property, and then whatever is the net amount, that has to be distributed in the ratio of the holding. So for example, if I'm saying 50-50%, and if let's say the rent received in the whole year is 12 lakhs of rupees, and you have paid 5 lakhs of rupees interest. I'm not talking about municipal taxes and the standard deduction, etc., but I'm just taking broad figures. So out of 12 lakhs, 5 lakhs of rupees you deduct, and 7 lakhs of rupees which are remaining would be divided between the two as 3.5 lakhs, which each of them will offer as taxable in their hands. So this is the first and the simplest way. Second is where it is a self-occupied property. Supposing they are themselves staying in this and they are paying the 5 lakhs of rupees interest. Now the question is, if that is to this amount is to be taken as a deduction, the maximum allowance there is only 2 lakhs. So again, it will be divided as two. There will be a self-occupied property for the wife, because she is the primary owner, and she will be able to claim the 2 lakhs of rupees. Now 50% is 2.5 lakhs. So therefore, the restriction will be only up to 2 lakhs. The deduction will be allowed up to 2 lakhs.
Okay.
The same way it can happen for the husband also if he is a co-owner. But now there is one more complication that comes in, where he says that she says that the husband is having one more property and the wife is not. This is the first property for the wife. Now under the income tax, you have a choice of selecting which property is your self-occupied property and which property is your let-out property. So therefore, let's assume in the case of the wife, there is no option, because she has only one property, so she takes this as a self-occupied property. In case of the husband, if he chooses, he can select the other property. So say for example, this joint property is property A and the other property is property B. So husband chooses that property B is his self-occupied property, in which case, as far as 50% of the property is concerned, wife can claim up to 2 lakhs of rupees being self-occupied. The interest can be allowed as a deduction. In case of the husband, the other second 50% becomes a deemed let-out property. So there will be a deeming income to be charged over there. So let's assume that the deemed income of that is 1 lakh of rupees. So if to that extent, it will be considered as if it is a let-out property. So on that 1 lakh of rupees, he can get a claim of entire 2.5 lakhs. So after taking the income of 1 lakh and minus the 2.5 lakhs interest, he will have a net loss of 1.5 lakhs.
Okay.
So that's how it can be claimed.
Rupashri, that was a fairly complex question, like Pannkaj told you right at the beginning, and you have got a fairly complex answer. Let me simplify it a little for you. Let me just wrap it up very quickly. What Pannkaj essentially told you is this, that when you buy property in your name and when you claim tax deduction on it, you need to first identify whether the property, whoever is claiming tax deduction, whether the property is rented property, whether it's leased out or whether it's self-occupied. The laws on tax deduction are very clear, and they differ for, how much tax deduction you can claim on self-occupied property is different from what you can claim on deemed let out or leased out property. So you need to clarify that, and also remember that once you have decided that this property A is self-occupied and property B is leased out, you cannot go around changing that. So what you have decided stays final. Once you have done that, then within the purview of the law, you can claim a deduction. So basically, you and your husband, both of you all need to sit down, decide how you're going to classify those properties, and then claim your tax deductions. Also, like Pannkaj pointed out, property A could be your self-occupied property, while property B, your husband could actually claim property B as a deemed let-out property. That also is possible, right? Moving on, we have Rakesh Kumar, who's dialed in from Delhi. Rakesh, how can we help you?
I'm Rakesh Kumar. In fact, I live in Bombay also with my son, and we jointly booked the property with Chanakya Range Forest.
Okay.
Flat in 2014. And the booking amount, they had demanded 50%. 50% of the basic cost of the house, they had demanded, and despite our testing and all, they insisted for 50%, and ultimately we had to agree for 50% only. And we paid most of the amount, and a small 3-4 lakhs, 5 lakhs amount was remaining, and which we paid later after a few months more. And they are charging the interest rate on that, and also the service tax, whereas so far the buyer-seller agreement has not been made. They have sent the buyer-seller agreement 3-4 months back. The draft they have sent, but the conditions they have put, which are not acceptable to us, and we are saying that since the agreement is still not there, so they should not charge any interest, but they are not agreeing to that. So that is number one. One question is that why are they authorized to take 50% amount as booking amount? Is there any law that 50% amount can be taken as 50% for the booking or booking the flat without the buyer-seller agreement and without the, whereas this is declared as the construction link payment. Balance 50% is the construction link payment. The house was to be given and completed in 2017. It is already almost 2.5 years, but no work on ground has been done so far. And they are insisting that buyer-seller agreement should be signed and the late payment fees and interest charge
Right.
and service tax all should be given.
Right. Rakesh, I can tell you this much, that you should not be paying 50% booking amount in the first place. You should not be paying a paisa over 20%. And also you are entitled to an agreement if you pay even 1 rupee to the developer, towards that particular flat. So these are your rights, and this is something that you need to be aware of. So you're well within your rights to actually go to the developer and ask him or ask the company to sign an agreement with you. As far as your service tax question is concerned, let me get Pannkaj in. Pannkaj, is he liable to pay service tax over here?
Service tax you have to pay, even if you are paying an advance. Service tax is payable, because just in case he does not recover the service tax on the advance, once the advance becomes an actual payment, because when the agreement is signed, then it will not be possible for him to recover the service tax. So therefore, it is more practical for anybody to claim, and even under the law, he is authorized to collect service tax on the advance amount.
No, so here, Rakesh has his own issues over here. Rakesh is talking about how, the project is delayed, there isn't work happening over here. Now, can he really, is he within his rights to withhold that payment of that service tax because the developer has not delivered as promised?
No, but the final delivery date is 2017, which has not yet come. So it is only post that that he can fight or go to the consumer court or take any further action. But I think until that time the builder can always say that my date is not over.
Right.
So I think there's precious little that he can do.
Right, Rakesh, precious little that you can do over there. So the best thing over here would be to pay the service tax. Also, one last quick question, Pannkaj, over here before we move on. Can he pay the service tax under protest, lodge his, his complaint in some way? Should he do that?
Well, whether you pay to the builder under protest or otherwise, it's not going to matter, because he is not a government authority that you are paying him under protest. He is just a collecting agency, and he is going to collect from you and pay it to the government. Now, based upon the last case law and other things which has happened, the Delhi High Court decision which we discussed last time, there is still not enough clarity available, and therefore the kind of dispute and other things will go on until such time that there is a overall ruling or this is accepted by everybody.
Right. Rakesh, so the smart thing to do over here would be to pay the service tax, and if the project is delayed, then what are your rights, but do ensure that you get an agreement signed before you do anything. I mean, even before you pay the service, pressurize the developer to sign an agreement with you. That is very, very essential. Facebook query coming in next. Debanjan Das says that he bought a flat costing 78 lakh rupees in 2015. He's paid 7 lakh rupees as interest till date. If he sells the flat for 90 lakh rupees, how much tax will he have to pay?
Well, answer is simple. 90 lakhs minus 78 lakhs, you don't, that is the amount of tax on 12 lakhs you will have to pay as short-term capital gains, and the interest will not be allowed as a deduction, because for computing capital gains, there is no provision for any deduction of interest. Whether it is long-term or short-term, you will have to pay the difference. So there is no deduction available for interest.
No deduction available over there for interest, and remember, you'll have to pay short-term capital gains because you are selling the property within 3 years of buying it. Moving on, we have a question that's coming on Twitter. Raj has tweeted in saying that he is in the process of buying a ready possession flat, but the builder has asked him to pay service tax on it. Does he need to do so? Ready possession flat, why does he need to pay service tax?
Yeah, my answer to this is, in short, no. He doesn't have to pay service tax. But just to explain you a little bit of logic on that, when you are buying a property under construction, there is a service element, because you are asking the builder to construct the property for you. Therefore, because of that service element, the government has put in certain amount of service tax. However, when the property is completed and when you're buying a ready-made property from him or a ready-made flat from him, what you're buying is a commodity. And therefore, on that, there is no service tax. So, you don't have to pay service tax on a ready flat.
Right, but Raj, what you will need to check over there is whether or not the property in question has already got an OC or an occupancy certificate. Essentially, what you call a ready-to-move-in property, which means, seeing that the flat is ready and you can walk in, may not really be ready-to-move-in property as it is defined in terms of income tax or, as it is legally defined. Legally, a property is ready to move in if it has got an occupancy certificate, which is when the developer can give you possession of that property. Only then does it become ready to move in, and only then do you actually get exemption from paying service tax on that. Right. Moving on, we have a question now that's come in on our website. Piyush Pahuja says that he bought a property in 2013, sold another property in 2014. Now, as per the agreement, the possession date was March 2015. However, he may get possession only by the end of this year or even later. If Piyush cancels the booking, can he put the money in bonds for 3 years? How else can he save on tax?
Now, first of all, it is not clear whether the property that he purchased in 2013, has he completed 3 years? Because it is 2016, all right, but depending upon the month in which you bought, whether it's not clear whether you have completed 3 years. Second thing is that even if you have completed 3 years, but if you're cancelling the booking, basically you are just surrendering it back to the builder and getting your money back. So in that case, there is no sale of property. And there I am afraid that you will not be able to get the benefit of investing in bonds. Now his next question is, how else can he save on tax? I can suggest two things. One is that he should hold on the property till he finishes 36 months. So make sure that it becomes a long-term capital asset. And second thing is, after doing that, instead of surrendering it to the builder, he should sell it to another buyer. In which case, it is actually a sale transaction. And doesn't matter even if it is considered that this is not a property transaction, but you had a right in a property and you have sold a right. But even then, you will be entitled to put it in bonds and save your capital gains tax. If you surrender it to the builder, I am afraid you will not get that benefit.
So essentially, look for another buyer, or else just hold on. You probably have a few months left to, finish the 36-month period. So if you're not in a tearing need for money, if you can hold on for some time, that would be the smart thing to do. Look for another buyer. Don't try selling it back to the developer or surrendering it to the developer. That will not get you any tax exemption whatsoever, because it's not technically, say, a transfer of property. You need to transfer the title of the property. So look for another buyer. Take that time. Wait till your 36 months are over. That's how you can. That's the best way that we can suggest for you to save on taxes over there. That's all the time that we have on today's episode of Property Hotline. Pannkaj Ghadiali, thank you very much for coming in, for breaking down all those complicated tax queries. If you have any other questions related to real estate, it could be anything. It could be buying, selling, or investing in property. It could be legal issues, tax issues like the ones we answered today, or home finance queries. Get in touch with us. IDs are flashing on your screens. We'll get the country's top experts to answer each and every one of your questions. That's a promise. Thank you very much for tuning in. Keep watching Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.